Right, welcome, Russ. So you're in Canada. How are things over there these days?
Hello, Cam. Canada is good. I'm in kind of Western Canada. It's springtime, so we have kind of that springtime weather where we get some really nice days, and then it's followed by snow. So it's in that transitional phase right now.
Yeah, I've been
Today's
to
today's a nice day.
I've been to Toronto, but only on transit. That's as close. Well, I suppose as much time as I've spent in Canada, and all I remember was a lot of snow and a lot of hockey gear, ice hockey gear, selling in the shops. So
Yeah.
that was my that's Canada sort of summed up to me. I did actually look to move there at one stage with work, and it all sounded great. And then somebody started telling me about having to plug your car into heater sockets in the car parks and stuff to keep it warm so it would start. And it sort of
In the
put me off a
wintertime, it can get pretty cold. Yeah.
bit. Yeah. Hey, look. So let's get on with the show. So, can you tell us a bit more about you personally, and what first attracted you to trading? How did you get into it?
Um. Sure. I don't know how much interesting there is about me. I can tell you what kind of got me into it.
Yeah, let's start there.
In the late 90s, I had a t-shirt shop. I was printing t-shirts, a one-man show. It's just a little tiny shop. I kind of fell into it by accident, and it's what I was doing. And I didn't really like doing it, but it was what was paying the bills. I was pretty good at it, and it's kept me busy, and I was, getting paying the bills with it. But I never really looked to expand. It was just a one-man thing. And because of the fact that it was just a one-man thing, it meant a lot of late nights, a lot of long hours. So I was doing okay. I was making a few bucks. And then a friend of mine says, you know what, if you've got some extra money, which is what I was looking to do, if you've got some extra money, you should invest it with this guy, because he's able to take some money and turn it around. It was kind of a high risk investment thing. So the returns were supposed to be pretty good. And he had been with this guy for a few months and said he was just doing awesome. He was making 10, 12% a month. And I thought, okay, well, let's try that. Couldn't really hurt. I thought I was being smart. I'm going to make my money work for me kind of thing. So I did that. I invested with this fellow for about 3 months, and I made about 30%, which I thought was fantastic. But his whole facility, his whole organization, his whole procedure got shut down, and all the money went with it. But of course, everybody was a little bit upset about that. But I looked into it a little bit more. I'm like, this guy, is he really making these kinds of returns? So looking into it, which is probably what I should have done to begin with, looking into it, 80% of what he was generating come from the Forex markets. And at that point, I had no idea what that was. What's Forex? I have no clue. I have no idea what that is at all. But he was generating this kind of money from these markets. So I did look into it. I started just online research. Google's your best friend. And I found out what it was. But what attracted me to it more than what this guy was generating every month were the charts, to be honest. It was the charts that got me really interested in it. Once I started looking at the images of these charts, I'm mathematically inclined for the most part, and that sort of struck a chord with me. I really could sort of see what was going on, and it resonated with me. I really was impressed by the charts themselves, the way the markets move up and down, and how you could try to guess where the market was going to go based on what the market had already done. And once I don't know, it was just a few hours. Once I got into that, a few hours into that, I think I was hooked forever. And I started working, trying to learn how to trade while I was already working 16, 17-hour days printing t-shirts. So I was coupling the two together. Took a while, of course. But after about 2 years, I started making money in the markets. And then eventually it went from making some money to making enough money, selling the t-shirt shop, and then trading full time.
Well, what a great story, from t-shirt shop owner to trader. That's a title for the podcast for sure. So you said you're mathematically inclined. I mean, I suppose what I haven't heard is what was your education? I mean, did you go to university? Did you study mathematics? How did that sort of fit in?
No, I am not formally educated beyond high school. As soon as I got out of high school, I went to work, and that's just kind of where I ended up going. But when it comes to numbers, I can do math in my head. Okay, like when my kids are having trouble with their math problems and stuff, it only takes me a few minutes to kind of learn the complicated things. It makes sense. Like it resonates in a way that I don't think anything else really does. I can process numbers not too badly. But yeah, as far as formal education goes, university, college, I'm not extra smart. I don't have any of that extra knowledge that
Yeah.
people think you might need to be successful at this.
So, I mean, do you think people who aren't mathematically inclined are going to struggle in the markets or not?
No, I don't think so. The math, as it turns out, really doesn't have to apply to this. You don't need to know how to number crunch. You don't need to know math. You need discipline. And if you have the discipline, everything else kind of takes care of itself once you understand sort of the fundamentals, which are not mathematically relevant.
Cool. Okay, well, it's a great story. T-shirt shop owner to trader. So let's get into trading. So what sort of I suppose we want to find out the detail around your trading at the moment. Okay, so what's the trading style, strategy, timeframes that you use, average trade duration, winning percentages, typical risk to reward ratio, monthly return if you can give us that, instruments that you trade, average number of trades that you have active at any one time, all those sorts of stats. I'll pick you up on anything you miss. Just hit us with it there, Russ.
Okay, that's a lot. So yeah, please
Yeah.
fill me in if I miss something.
I will.
Right now, I am basing my trading strategy around something that I've dubbed market equilibrium. Now, over the years, I've come to realize the market has a sense of balance to it. And I think every trader that's been in this for a while kind of instinctively has this knowledge. The market becomes overextended and then has to recover. And then after it recovers, it has the greatest potential at this point to make the biggest moves. And that's kind of where I'm at right now, is I'm looking for the market recovery. Once I get the market recovering, it finds its balance or its center, essentially its equilibrium. And it's only at those times that I'm looking to take trades. I'd like to get 2-to-1 out of most of my trades if I can do it. 1-to-1 at the minimum, of course. But yeah, I'm focusing more now on taking fewer trades, but more robust trades. I'm looking for trades that have the biggest potential. And again, it's where I've kind of figured where this market equilibrium is. So my trading strategy is based around its sense of balance. Because of the different things I do in a day, I don't just trade. So, I've got a forum going in members area with different systems and so on. There's a lot that goes on during my day. And of course, I've got the family life, the kids going to school and so on. So there's a lot going on that's, outside of trading. I've got a life as well as. So what that does for me is reduce my time frame to the 5 minutes. I like to trade the 5-minute time frame. Maybe I should rephrase that. I trade the 5-minute time frame because of the restrictions that I have. I can't sit in front of the charts for too long. So if I'm trading a 1-hour time frame or 15 minutes even, it's just the duration of the trade is just too long, and the number of signals I get is just too few for the limited time that I can sit in front of the charts. So I drop down to the 5-minute, and I can get 1 or 2 or 3 trades a session. I'm not looking to get more than one. Like if I can get one successful trade, I pretty much feel like I'm done for the day. If that trade happens and it's over in 30 minutes, well, maybe I'm looking for another trade. I'm being fairly selective when I take a trade. Like I said, I'm looking for the sense of equilibrium. I'm looking for these zones. If the market gets into this zone, then all right, I'm going to be looking for a setup there. And if it doesn't happen, I'm not going to force it. If there's no trade, there's going to be days where the market is trending and it's just not really something that I'm trying to grab the end of, So there'll be a day here or there where I'll sit there for 3 hours and not trade. And that happens 3 or 4 times a month. And then there's other days where the trades are looking so good that I just can't pass them up, and I'll take 3 or 4 trades in a single session. The duration for a trade is, for each trade, because of the time frame that I'm trading, it can go anywhere from 5 minutes. Like I'll get into a trade and the very next candle will hit my target. 2 hours, 2.5 hours. So it does range. I do sit in front of the charts for about 3 hours if I have to. I like to trade the London session, the beginning part of London, because for me, that's 1 o'clock in the morning. So I'm going to trade the first couple hours of London. If I can get a couple of trades in there and be done by 2 o'clock in the morning, then I'm happy. I can go to bed. I'm up at 7 o'clock in the morning. So if I'm trading 1 o'clock, 2 o'clock, 3 o'clock, that doesn't give me a lot of time at night for my rest. And I'd like to get as much sleep as I can. So I'm not going to spend a whole lot of time during, those hours if I don't have to. So if I can get 1 or 2 trades in and be done, then I'm good to go. I can go to bed. The currency pairs that I'm looking to trade are just the basic ones. I'm looking at the Euro USD, Euro Yen, sometimes the Euro Odd. I'm looking at the Pound Yen, Pound Odd, Pound USD. I'm looking at US dollar, Canadian dollar, US dollar, Japanese yen. Sometimes the US dollar, Swiss franc. It's there. It's on my platform. I seldom trade that one. I look at the Australian dollar, US dollar. Sometimes the Australian dollar, Japanese yen. Sometimes the New Zealand dollar, US dollar. Sometimes the New Zealand dollar, Japanese yen. I don't have a huge repertoire. It's about 10 pairs that I look at. I don't load the charts up with 20 pairs. And I know traders that'll look at 30 pairs and try to get something out of that. I've got about 10. And depending on the time of day, and generally nowadays it's the London session. So I'm going to limit it to kind of the euro and the pound pairs. I know the other pairs will move during this time, but if I can narrow that down to maybe 5 or 6 currency pairs, and if they look like they're going to move, now if the market has got a bit of a flow to it, then that's it. I'm going to look at maybe 5 currency pairs, and then if I can narrow that down even further, then I'm going to try to get down to like 1 or 2. And if I can get 1 trade out of that, 2 trades out of that, and then I am happy. I'm good to go. Am I missing something?
No, I think you've covered most of it off. I suppose the only question I've got is around timeframes. I mean, do you? I mean, you're on the 5 minute, but do you actually sort of go up to higher timeframes to see what the movement of the market is, or look at market structure from a higher perspective?
I like the higher time frames better. I'd prefer to trade a 15 minute, but yes, I absolutely take a look at higher time frames for a bias. I want to know what direction has the potential. It's the biggest potential, because I'm trying to get, a 2-to-1 out of my trades. I want to know where that bias lies. And if I'm looking at the 15 minute and even the 1 hour for that bias, then that is part of my trading ritual. I'm going to start with the 1 hour, mark off very significant areas of support and resistance, could drop down to the 15 minute and see if the bias for the 1 hour and the 15 minute are the same. And then if I'm looking at a long bias on the Euro USD, for example, on the 1 hour and the 15 minute, then I'll be looking for my setups on the 5 minute, which hopefully will get me a 2-to-1 out of that. So yeah, I'm trading the higher time, not trading, but looking at the higher time frames. It's a very important part of my analysis.
And are you drawing trend lines as well as marking off levels? Is that how it works?
I love trend lines. I know a lot of traders don't, but I really do like my trend lines. I've come to know how they work really well, and I really do depend on trend lines. I love my trend lines. If I can get a trade that will incorporate a trend line, I feel just warm and fuzzy inside. Doesn't always happen. I can't always draw a trend line, but if I can manage to get the signal, the bias, and a trend line, and it all works together, I'm happier than anything to take that trade.
And I suppose, so if we look at it over a course of a month, I mean, what would be you'd walk away, you're trading maybe 4 or 5 days a week. I mean, what would be the average winning day, I suppose? How many winning days out of a month would you take?
How many winning days out of a month? Most of them I'm ahead. I'll have 2 or 3 losing days, four losing days out of the month. It's really important to me to manage a trade. I don't let my losses amount to very much. And I've got some very hard and fast rules when it comes to that. I'm looking for a specific kind of setup. I'm looking for an opportunity to move my stop loss. And if I can start moving my stop loss in the very next candle, my stop loss is important to me. I put that in a place where if it hits, then I'm wrong. And I kind of make that decision beforehand. And then as the market moves, I'm going to start managing it. So I can take a loss and then have a mediocre win next time around and make up for that loss and still be ahead by a little bit. So for the most part, I come out ahead. So as far as just losing days, if I have 3 losing trades in a row, then I'm done. I'm not going to try to make that up. I'm not going to start revenge trading, because I know at that point that's where my emotional state is. If I get 2 or 3 losses in a row, then I'm not going to trade with a clear head anymore. So I have to give it up and just walk away and try to recoup that the next couple of days.
Okay, so you've given us a bit of an insight into your crazy, what I like to call a crazy trading day, in terms of starting at 1 a.m. in the morning, and you are really just squeezing it in there, aren't you?
I am.
Although that's when the market kicks in for you, so that makes sense. Do you want to give us a little bit more insight into maybe the rest of the day and how that looks, and how on earth you get by with potentially 5 or 4 hours sleep? Do you sleep again during the day? Surely you do.
I get asked this question sometimes, especially with members in my forums, like, tell me about your day. And I'm like, you really want to know about that? It seems like the boringest thing ever. Like, I don't understand why people want to know, but I will tell you. It starts at 7 in the morning. I'm up. I got kids that go to school, so I take care of that. 8 o'clock to 9 o'clock, I'm out delivering them to their schools. And then I will do a little work, 9, 10, 11. I'm going to take care of the forums. I'm going to be doing some writing, whatever the case is. And then, yes, I'm going to have a nap. And I try to get that in between 12 and maybe 1 or 2. The nap is tough because it always makes me pretty groggy. Like I can't seem to function at that point in the day, and I have to have my little nap because I'm only sleeping for 3 hours. So I take a nap for 1 or 2 hours. And then I'm up again, and then I try to finish off whatever it was that I started, and then 3 o'clock rolls around. Okay, between 3 and 4, I'm getting kids from school. Between 4 and 5, it's feeding all the kids. And then between 6 and 7, I'm trying to get to the gym because I'm sitting in front of the computer all day, so I need to get a little bit of exercise. So there's that. So I'm at the gym for an hour, and then back to doing a little more work, spending some time with the kids kind of in that window. And then once the kids start going to bed, 10, 11, then I'm sitting back in front of the charts, and then I'm preparing for my day. That'll start at about 1 o'clock, sometimes a little bit earlier, 12 o'clock, and when Frankfurt opens. And if I can get a trade in at 12 and be done by 1, doesn't happen all the time, but sometimes the setup is there, then I'm excited to go to bed and maybe get 6 hours of sleep. But otherwise, I'm sitting in front of the charts and I'm trading, and that'll go till 3 or 4 in the morning. But that time when I'm trading I'm not doing forum. I'm not writing anything. I'm not doing anything except for looking at half a dozen charts, and that's it. That's sort of my my trading time, my Zen time. Nothing interrupts that. Like during the day, I'm doing 15 things at once. But when I'm trading for those 3 hours, that's everything gets shut down. My phone gets turned off. My Skype goes on, do not disturb. The internet, basically just Facebook, whatever social stuff I have just gets minimized. And I'm looking at the chart, get my trades in, and the whole thing starts over again the next day.
And that's actually funny because sorry, there's a bit of an echo in the background there. It disappears after a while for some reason. I can't work it out. But anyway, it's quite funny because I mentioned this, trying to allocate time for your trading in a previous episode that I was just sort of giving an update and said I was really struggling with finding that time in the day that I can just say that's all I'm going to do is sit in front of the charts and do trading. But maybe that's what it takes. Maybe it's the odd hours that everyone else is asleep that you have to allocate to do this to get this craft right. So and a lot of people probably don't want to do it. I mean, I'd imagine the majority of the world don't want to either wake up really early or stay up really late to take advantage of the markets. So yeah, it's interesting to hear that, and I suppose maybe that'll give some of the listeners out there a bit of a kick up the backside to try and find that 2-3 hours in the day to just allocate to it. Even, make it 5 minutes, make it 10 minutes, 15 minutes, just start off slow and then build it up. So I was going to say, maybe you'd find it better living in Spain or something like that, where you get a siesta in the afternoon.
That is the dream. That is the dream. I keep thinking, maybe I'm going to take a month and just move to London. Just live there for like a month and do some like serious trading. But when I started this, I was printing T-shirts. So I had a full plate. So there wasn't time really to trade. So what I was doing was trading the 4-hour time frame. I could show up in front of my charts for 5 minutes, maybe not even, every fourth hour, look for a trade. Because you're doing this, you're analyzing it at one candle at a time as it progresses. So you're looking for a trade. I've got my trend line drawn. This is what I'm waiting for. All right, 4 hours later, you come back. Has that happened? No. 4 hours later, you come back. Okay, let's enter it. Okay, you enter the trade because this is something you've been preparing for. 4 hours later, can I manage the trade? No. Okay, 4 hours later, can I manage it? Like, you know what I'm saying? Like, you come back for 2-minute intervals every fourth hour. That I was able to work in. Trading, okay, you're going to hear this from some people is, you should be able to build your trading around your life. Now, to some degree, yeah, I mean, you have a life. You have to take care of those responsibilities. But, I mean, I'm trading 5-minute time frame. I'm looking at the 15-minute time frame. I can't be doing that during Asia. I mean, there's just, the market is hit and miss during Asia. When it moves, it doesn't move very much. So I've got to be present during the period of time where the market's going to move. For me, that's 1 o'clock in the morning. Between 1 and 4 o'clock in the morning, that's my window. I've got to carve that window out. I prefer that time happened at 6 o'clock in the evening for me, so I could be done by 9 or 10. That's just not the reality, though. I don't live in a time zone or part of the world that allows for that. If I lived in Europe somewhere, it'd be way better. I'd have, my day would be for trading, and then my evenings would be for the other stuff. I've got to kind of flip that around right now. So my day is forums and writing and just management and all these different things, kids and just the life. And then at nighttime, that's when the market happens. That's when I've got to trade. I've got friends that live on the East Coast, and they don't trade the London session because for them that's 3 o'clock in the morning. For me it's a little more manageable because it's 1. So what they're doing is they wake up for the U.S. session. For them it starts at 8 in the morning. I mean, that's great. It's awesome. They can get a couple hours in. For me, I could do that too if I really wanted to. That's 6 o'clock in the morning, but I mean, I've got to start getting kids ready for school at 7:30. So that gives my trading window, it's very small. It's just not practical. Even though that might be what I want to do, I have to work around the hours that are best suited for trading. And it's going to come down to how bad do you want this? Like, do you really want to do this? Do you really want to make trading profitable? Do you want to make money from this? And if you kind of do, then you'll find a reason not to do it. If you really want this to work for you, then you're going to carve out that time. And it doesn't have to be a ton of time, but you do have to carve out a window that you can appear consistently. Like, you want to be able to show up at this time between here and here every day, because the market has its periods of the day. You know, it moves well at this time and it doesn't move well at this time. It moves this way at this time and it moves that way at that time. So if you can show up at the same time every day for the same window, you get to understand how the market moves for that period. You get to understand how far it can move. You understand the nuances. You learn to speak its language, and then you start doing better. And if you want to do this, this is the kind of thing you're going to end up having to do in the end.
And it's funny how it took me 74 episodes to actually work this out, but I did in the end anyway. So, right, in the beginning, what do you think, we heard about you realised, you had a bit of a mathematical bent, and also, you dived into Google, you love the charts. I mean, what do you think made you different from every other mum or dad trader out there to get to the point where you are now, where you're, making money most days out of the month, and you're doing well? So what traits did you have, and what actions did you take, and what could you recommend the listeners out there start doing to try and replicate that?
When I started, I wasn't different. I was the worst trader that I knew. And I think that helps me in the position I am now. I'm an educator. But because I made every single mistake that a trader can make, I've been through that and I've managed to kind of get beyond that. So I understand, first of all, what a new trader is going through because I've been there. And I still battle some of those things today. Like, you want to get into a trade. I'm looking at 1 o'clock in the morning. So I want my trade in and out. Like, I want to be done. So I'm trying to get in fast. Okay, I'm going to rephrase it. I'm not trying to get in. I want to get in fast. I want to take my profits quick. I want. And that was the problem in the beginning. I want to do this. I'm scared of this. I can't do this, blah, blah, blah. And that ended terribly. I lost more than I made. And it took me 2 years to figure this out. I was not profitable for the first 2 years, right? In that 2-year window, I quit at one point. You know what? I said, screw this. I can't do this. It was weird because I really enjoyed it. It was frustrating as anything. And I couldn't make any money doing it. But of course, a month later, I'm back at it again because it just never leaves. I think once it gets in your blood, it stays there. So I come back at it. But that little break gave me time to kind of process my problems. What was I doing? When you start trading, you hear a lot about the psychological stuff. You see posts in the forum maybe that you attend, or you see a book about it, psychological aspect of trading. And that's the last thing that a new trader wants to hear about. You don't want to hear how you're the problem. You want to hear about this great system that can make you money overnight. So you ignore the psychological stuff. You don't get into it. You don't really understand what's going on in your head. And that's where the problem for me was lying, was in my head. I was trying to make too much money, too fast, holding on to my losing trades, being scared when I was winning because that market is going to turn around and take away that little bit of profit that I have. So I'd close them really quick. So I'd win $5 and lose $25 because I'm holding on to the losing ones because the market, quote unquote, is going to come back. It's going to turn around. I was doing all the wrong things. So I realized, A, I can trade a smaller position size. B, I can trade fewer pairs. C, I can be more selective about the trades that I'm taking. And I wasn't doing any of that stuff. I was taking every single signal. I was trading these huge lot sizes. I was I was looking at the 30 different currency pairs, trying to find as many trades as I could. Because if I could take one trade and make $10, well, what if I take 10 trades? I could make $100. I had that mindset. It was wrong. And I suffered for it. So once I slowed down, I took a breath, I started just being relaxed, then it started to come together. Then after this, I realized, okay, well, I can use my stop loss to my advantage. I can start to minimize the losses. I can start to manage the trade where, okay, I'm going to start out risking 2% of my account on this trade. I can move it to 1.75%. I can move it to 1.5%. I can move it to 1%. I can risk half, like I can reduce that risk. And all of these little tiny things, they don't seem impressive. They don't seem like a big deal. But when you start putting them all together, you trade less, you risk less, you're settled, you're more relaxed. Then the trades I have start to win. Even though I'm taking fewer trades at a smaller size, I'm actually positive now. I'm starting to make money. But again, this took me 2 years to figure this out. I don't think I'm better or different than anybody, but I did manage to figure out I was the problem. And if I'm the problem, I'm also the solution. So if I can be the solution, what's the solution? What it is, what can I do to fix this? It wasn't why am I not winning? It was why. Let me rephrase that. It wasn't how come I'm not winning? It was what can I do to become winning? To win. Like the focus changed. I wasn't blaming the market anymore. I wasn't blaming my broker anymore. I wasn't blaming my trading system anymore. Starting to take responsibility. What can I do to make this work? Once I gave myself the power to make the change, once I took the power away from the market, once I took the power away from my broker, from the gurus that are out there on the forum, just once I took that power for myself, things started really to turn around for me. And it took me 2 years to figure that out.
Yeah, I know exactly what you mean because I don't know. I mean, I've just looked at the last 5 or 6 trades that I've taken, which have been probably over the course of the last week. And I mean, it's not a lot of trades over the course of a week, and these are all manual trades. And I've actually that stuff resonates with me because I've had one losing trade. Actually, maybe it was 7. One of them was losing and 6 winners after that. But it's almost like I've sort of psychologically turned a corner because I'm no longer just revenge trading. I mean, the only thing I'm struggling with still is when I exit a trade and profit and seeing the price carry on in the direction and going, oh, if only. And I think once I can get rid of that issue with me, then I might sort of have got to another level where I can start taking things further. Anyway, that's about me, but this is all about you. So the next question is, what about other retail traders? What steps would you recommend they take to start earning income trading?
Okay, I'll get to that. I want to address what you had just said, though, because other traders feel the same thing. You said, you take a trade, you get your profit, and the market takes off. Every trader sees that and questions that themselves. How do you know? How do you know if that's the case? And you don't know. So that's the first thing is you don't know. All right. The way I approached that and the way I'm kind of at peace with that is this is what I asked from the market. All right. I asked for 15 pips of profit. I asked it by putting my take profit there. The market gave me exactly what I asked for. And then whatever happens after that, it's none of my business. It's not for me. It's for that other guy that asked for 25 pips. All right, the market's trying to deliver for that guy now. It gave me what I asked for. And it's done. I'm happy. I'm grateful for what I asked for and received. Now it's time to move on to the next one. The fact that the market carried on after the fact, that wasn't meant for me. I didn't ask for that additional stuff. So any negative feelings that I have about that really are unfounded because I didn't ask for that. That's somebody else's wish being fulfilled. So I got what I asked for. I'm happy about it now, and I can simply move on to the next trade. Now for the next question is the other retail traders. What can they start to do to be better? Slow down. You have to, especially when you're new at this. If you're brand new at this, the marketing doesn't help either. You've got marketers telling you that you can make all this money super easy, super quick. And at one point in your career, this will become the truth. You will be able to make more money. You will be able to do it fairly quickly, but it's not going to happen right away. If you consider trading as one of those things where you can make a lot of money, equate that to anything else that you can make a lot of money. How many lawyers do you know started making $100,000 after the first week they decided to become a lawyer? Doctors, whatever the case is, CEOs. If you're making a lot of money doing a thing, it's going to take time, and it's going to be in proportion to the amount of money that you can make. So if you are thinking you want to make $100,000, $1 million in trading, you're going to have to put that kind of time into it to get that kind of reward out of it, if that makes sense. Slow down, try to learn, and you have to focus on yourself too. If the market is doing this, how am I reacting to it? Why am I reacting this way? If I'm upset, if I'm mad, if I'm angry, if I'm frustrated, if I'm afraid, these are all things that are going to affect your trading. So do similar things that I did when I started. I was losing all the time. I reduced the lot size. That reduced some of the stress. I reduced the number of currency pairs. Again, that reduces some of the stress. I just started to slow down. I became very picky about the trades I was taking. And you want to understand why you're trading. That was a big thing for me. I was taking a trade because an arrow popped up on the chart. And that is no way to trade. You can't realistically be profitable in the long run if you don't know why you're taking this trade. Because an arrow pops up on the chart, that is not a reason to take a trade. Because it crossed an area of support or resistance, because it broke a trend line, because the higher time frame is moving in this direction and it makes sense, this is a reason to trade. Learn why you're taking the trade, slow down. It is going to start improving almost the instant that you make these decisions.
Some great advice, guys. So take that on board with what you're doing now. Stop and slow down. Right, so can you explain to the listeners your preferred trading strategy? So the ins and outs of how it works and why you chose this one over others.
Again, it comes back right now to a sense of market equilibrium. I'm looking for the areas where the market resets itself, for lack of a better word. When the market gets to this area, it wants to move away from this area. And then it's going to want to come back again. And then it's going to want to move again. And it's going to want to come back again. And this area, this equilibrium, kind of follows the market. So if the market's moving up, this equilibrium or balance sort of follows the market up with it. What that means is when you get a market that's at its balancing point, it is going to want to take off. And that move away from its balance is going to be a big move. And because that balance follows the market, as the market is rising, its sense of balance also rises. And that means that any return to its sense of balance is going to be a smaller move. And you can see this in any trend. And the market is trending upwards. It makes these big moves up and a small move down. Big move up, small move down. And that is essentially the cornerstone of my trading right now. I'm looking for areas where we have a sense of balance, and then I'm going to take advantage of the explosive move away from that area.
So I suppose if I'm just trying to draw that up on a bit of paper here, and so yeah, it's almost like, so if the market was trending and the equilibrium was the trend line,
sure,
it would be when it would hit the trend line, it would be the time that you'd be going, well, that's probably when I'm going to enter, because I expect it to sort of move away from the equilibrium and possibly spike up, exactly, or spike down depending on an up or down trend line.
Yep. So if you've got a trend line that moves up, and you can draw this trend line on any chart. If you've got a chart in front of you, take a look, find this little period of time where the market is moving upwards. Draw a trend line, bottom left, upper right, just underneath the price, and then just see what the market does. When it hits the trend line or gets close to it and it moves upwards, it is going to move 50 pips, for example. When it comes back towards the trend line, it'll move 15 pips, 20 pips. It gets to the trend line at this point because the trend line is moving up with the price. And then it's going to move away from the trend line. It's going to move another 50, 75 pips. And then it comes back to the trend line. That move back to the trend line is going to be 20 pips. So you're going to have these big moves away and these smaller moves towards. So the opportunities are there when you get to the trend line or the moving average or whatever tool you're using to find this sense of balance.
Okay, so if you had to split your trading up into technical versus fundamental, how does that look? I mean, do you use any fundamental with what you do?
The only fundamental that I use is the reports as they get released, and I'm looking at the economic calendars for that, and I'm not looking to trade them. What I'm looking for is areas or periods of time to not trade. I'm not looking to trade fundamental reports. The reports are the ones that move the market right now. Anything else fundamental, an event, something that just happens kind of out there that will fundamentally drive the market, doesn't happen now. Like, it's not fast. Like, it happens in enough time for a trading for the chart or your trading system to identify a trend, to kind of give you those signs that, okay, we're in a trend. So I'm going to be trading the market in a trend fashion. I'll be looking for buying the dips, selling the rallies kind of things. So the fundamentals that could move the market, 500 pips, they're not going to be instant. It's the interest rate reports and the FOMC and the NFP and, these kinds of things. And again, I'm not going to trade them. I'm just looking at them more for the times that I shouldn't be trading, because I don't want to be subject to that kind of whipsaw, that kind of quick market movement. Your stops aren't always honored when you get a move that goes against you very, very quickly. You can have your stop loss for 20 pips and get taken out at 35 pips.
Okay, so what about price charts and recommending something our novice traders out there could spend a bit of time educating themselves on over the next week or so? I mean, what three things would you recommend they focus your attention on?
Three things. I would go support and resistance. Learn to identify support and resistance levels. Learn to draw a trend line. And number three would be take a look at chart patterns. Take a look at, you can just Google that, Forex chart patterns, market chart patterns. My favorite chart pattern is something called the wedge. It's actually a counter trend pattern, but there's several of them. And once you can start to identify a pattern, basically a pattern has a 70% success rate. So if you can identify a wedge, if you can identify head and shoulders, if you can identify a double top or a double bottom, and then learn how to not just identify it, but how to trade it. How do you notice that there's a double top and then get into that trade? Or get into a short trade off a double top? How do you identify an upward sloping trend line and then get into a short trade? These kinds of things. Once you understand support and resistance, once you understand how to draw a trend line and chart patterns themselves, then you're going to be better suited for making the right decisions. You understand at this point, when you know those three things and you're taking a trade, you know why you're taking the trade. It's not because an arrow pops up on the chart. It's because I've got a chart pattern. It's because I've got a trend line that's been broken. We've got a market that's bouncing off of support level. So those would be my top three things.
Cool. Funnily enough, those are three of the, I think, four things that I'm using actually at the moment. So it's nice to hear that from you, Russ. Right, we're going to actually move into the last section of the show. It's called the Technicals, and I'm going to run through 9 quickfire questions to help the listeners out there understand what it takes to become a successful trader. So are you ready for this, Russ?
Sure. Lightning round.
Righty-ho. It is a quick fire, as quick as you can be, but some of them do need a little bit of explanation. Right, so how long did it take you to go from trading newbie to consistently profitable?
I'd say 2 years.
What's your mental approach to trading, and can you share with us any special techniques that you use?
I trade a certain period of time. I've got my 1 o'clock to 3 o'clock, 1 o'clock to 4 o'clock window. Because I trade this period of time, I sort of get into the state. When I'm trading, I don't let anything bother me. The social media is gone, my forums are gone, my phone is off, my Skype is on DND, and that's all I'm doing is I'm trading. I've done this often enough now that, once I sit down at my charts, I'm sort of getting into the zone. If you can't, listen to a piece of music, listen to something, establish some kind of ritual. Get a certain drink ready. These kinds of things. A ritual that is going to represent, this is my period of time to trade, and then go with that.
What's your favorite entry setup?
Break of a trend line.
What strategies do you use to exit or manage active trades?
I like to trail my stop loss. I will manage a trade this way, but I like to go for a hard target. A lot of times the hard target is going to be an area of previous support or resistance, or I'll try to get 2 to 1.
What's your recommended trading book?
Trading in the Zone by Mark Douglas.
If there was one thing you'd recommend to any retail trader spend the next month mastering, what would it be, why, and how could they go about mastering it?
Chart patterns. Chart patterns are going to incorporate trend lines and support and resistance, and there is a ton of information on the internet. You don't have to look for Google Forex chart patterns, and the world is yours at that point.
What's your preferred broker and trading platform?
Right now, I use Think Markets, and they offer me the MT4. I like the MT4. Yeah.
What's the worst trades you've ever had?
The worst trades I've ever had have been trying to trade FOMC, trying to trade NFP. They were disastrous.
If you could leave our listeners with one piece of advice, what would that be?
Slow down. Don't try to make $1 million by tomorrow. Have a goal. Great. If you want to make $1 million, that's cool. But slow down, relax, learn the process, and learn why you're taking this trade.
Okay, and finally, we'd like you to give us the bones of a full trading strategy, the entry setup, stop loss, take profit targets, market time frame, something our listeners can try it at home. What have you got for us there, Russ?
A trading strategy on a podcast includes just lots of words.
It does indeed. If you've got a chart that you can send us afterwards, that's always more than welcome.
What I've been looking at, what I've been looking at lately is a 3 time frame approach. Now, I never used to really get into the whole 3 time frames. I was always look at the next higher time frame and then don't go beyond that, because any time frame higher than the next higher time frame is essentially useless information. You can get an idea for where the market will ultimately go, but the small zigzag on a 1 hour time frame is significant on a 5-minute time frame. So any pullback on a 1 hour, even though the trend is going up on a 1 hour, the little tiny pullback that you get on a 1 hour time frame could be one candle, could be a significant short trade on the 5 minutes. So I used to say, just look at the next time frame. You're trading the 5, look at the 15-minute. What I'm doing right now is incorporating that 1 hour, the third time frame, in conjunction with the next higher time frame. So I've got, let's say, and this is something that I'm putting together right now, is I've got a 2 EMA and a 5 EMA. 2 moving averages. Very, very simple, very fast. What I'll do is take a look at the 1 hour and what direction are those moving averages going? Is the 2 above the 5? If so, the 1 hour is long. All right, now next thing is look at the 15-minute. What is that one doing? I want that 15-minute to be in the same configuration. I want the 2 above the 5. That gives me a 1 hour that is long, gives me a 15-minute that is long. I want the 5-minute, which is the one I'm actually trading, to go short. I want the 2 to go underneath the 5. And then if the 1 hour and the 15-minute stay long, the 2 above the 5. Then I want on the 5 minute, the 2 to move above the 5. That would be my entry signal to go long. Very, very, very basic system. But incorporating that third time frame has really given it a lot of power, because at that point, I'm putting my stop loss just underneath the most recent swing low. It's going to be fairly small. And I can go for 2-to-1, 3-to-1, 4-to-1 targets, because now I've incorporated the ultra higher time frame. I'm not looking at the daily, I'm not looking at the 4-hour, but I'm looking at the third time frame up. Trading the 5 minute, looking to the 15 and the 1 hour. And if I get all three in conjunction, then these trades have much more potential. Of course, you're not going to win every trade, but the winners can be much more significant than the winners that you've had in the past. So if you want to give that a try, take a look at it. Use something that's quick, like the 2 and the 5. And that would be a really good jumping off point.